beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
A Nikkei, Hang Seng, Shanghai, Kospi, all are in the green.
And it won't be from us. We don't have to give them anything.
9 officials now project at least one rate hike this year.
Fed upgraded its inflation outlook and removed its easing bias.
Market reacted so negatively to the statement were the dot plots.
And the details have largely been in line with what CNBC-TV18 had reported.
0.1 higher on the Nifty and about 0.2 odd on the Nifty Bank.
The markets have been reacting to the Fed, the statements that have been coming in from US and Iran.
Well, it's been a quiet day for the market so far.
Since they target nearly 50,000 crore plus gross merchandise value.
Seminal event for India, the 26% fall in crude prices.
This is going to possibly increase services trade between India and the United.
Well, we recovered from the lows, so that good run continues. We are above that 24,100 mark.
Well, that is the day so far. Markets are kind of more in the flattish zone today, the indices at least, but there is a lot happening beyond the surface, below the surface rather, below the Nifty index, the Nifty Bank, and so much in the broader space as well. This is Closing Bell coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Nigel is with me. Nigel, hi. Afternoon.
Hi, Prashant. Today what's encouraging is also the money market action, because on the day when the dollar index showed some strength overnight, the rupee actually, after weakening initially, it went to around 94.7. That's pulled back to around 94.25 the last time I checked. So good to see stability in the rupee, even in the backdrop, where the dollar shows some strength. To be fair, when the dollar index itself had weakened, a fair bit, the rupee as well weakened. So this is good to see, I think. Some kind of stability in the rupee is something I think the bulls will like.
Yeah. I think those numbers are still doing the rounds in terms of how much will, foreigners be able to, how much will NRIs put in, and we had a few numbers this morning as well from Federal Bank and others, etc. So I think that flow is very much keeping the rupee bid alive, even though earlier in the morning you had a bit of a sell-off coming through. 94.28 or so is where now we are at. The Nifty Bank, the mid-cap, small-cap indices, just take a quick look at all of them before we go any further. The Nifty is unchanged. We started there, we're there still. Actually, we're pretty much, we've had a bit of a rally, bit of a dip, but almost unchanged now. Nifty Bank is maybe a little higher compared to where it started in the morning. And the mid and small-cap indices, take a quick look at those as well. So 100 points higher, so nothing, about 0.15, and the small cap index is also about 57 odd points in the green. NSE advanced decline ratio is also not that. It's about 1,700 stocks are higher and about 1,550 stocks are lower. So about 150 stocks separating gainers and losers across the board. So this is a much more closely matched market as compared to what we've had in the recent past. Well, let's just quickly run you through what's coming up here in terms of the program. So we'll talk about individual names, and we'll talk about Bata, where there's a management change. We'll talk about Nykaa. We'll talk about a bunch of other names as well as we come through. Bata is still up about 6.5%, was up almost 10. New man at the top from Nike, by the way, at Bata. So Mangalam talks to us about that. Nykaa is the other one which continues to be strong. There are some numbers which the company's put out as far as aspirations are concerned. So that's coming up in just a bit. How should you position yourself is the question. Mitesh is with us with the answer. Mitesh, good afternoon. Good to have you here. What would you recommend?
Good afternoon, Prashant. See, on the indices, nothing has changed. Nifty is practically flat. The bank Nifty has moved up slightly. And I've been highlighting that the financials could slightly outperform the Nifty, and therefore banking index would do well. But broadly, I think stay long. Could be some intraday volatility, but so I have.
Okay, I think we are having a little bit of trouble. Mitesh, give us 30 seconds. We'll just sort of patch you in again, and maybe the connection will be a little better, but we lost him right there as he was about to start talking about levels and stocks, etc. But Just going back to Mitesh in a bit, maybe Mangalam is with us in the meanwhile, and we can sort of address those two names we were referring to earlier, Bata and Nykaa. Mangalam, take it away.
Well, let's start with Bata. Bata's got a leadership change. The announcement that has come in right now, Sanjay Rao has been appointed as the managing director and CEO of the company with effect from October 2026 to August 2031. It's a period of 5 years. The stock is up 7% on the back of that announcement, and there are two reasons why. One, over the last 3 years, if you look at it, the revenues of the company grew at a measly 1% CAGR. The profits actually declined by about 20% on an annual basis. And the stock, which was in November at around 2150 rupees a piece, has now come down to sub 700 rupees before this announcement was made. So it's been a rank underperformer. And what does Sanjay Rao bring as experience? Two things that really stand out as keywords for me. One, Nike. Second, Zara. What does Bata do? If it has to, increase its fast fashion quotient, then Zara experience helped. At the same time, if you look at, the footwear quotient, who better than Nike when it comes to designs and moving into the premium part, sneakerization of the world, if you must. And finally, if you go through, Sanjay Rao's LinkedIn profile, he marks himself as a turnaround specialist. So all these three things coming together for Bata, a company which has been struggling with growth, gets a turnaround specialist who has experience in both Nike as well as Zara. Can that be any better as a combination? Perhaps not. So, we are seeing a lot of excitement built in right now. Remember, he joins from October. Performance is something that the street will monitor more than just the credentials right now. But as of now, a leadership change is something that, is giving some hopes to a lot on the street.
What are valuations like, Mangalam, for Bata, if you've looked at them lately?
Well, lately the valuations have not been, particularly attractive, largely because while the stock price has corrected, you've had the EPS correct as well. Last 3 years, I was looking at it, the stock price is corrected by about 25% on a CAGR basis, whereas the net profit too over the last 3 years has corrected by about 20% CAGR itself. So which tells you that the multiples of the company have not, really compressed. It's more an earnings-led depression in the stock price than just a multiples-led depression that we're seeing.
But the gentleman, Mr. Rao, I think it was based overseas, right? He's not he's not based here in India, at least the last posting.
Yeah, he's not based here in India. Last posting was basically Senior Director, Nike Retail for France and another, country in that region itself. But importantly, what really stands out is that his Zara experience, the Inditex experience, works very handy in India because while he was at Inditex, he was instrumental in launching the Zara clothing into India with the joint venture with the Tatas. So obviously, it's not that he's completely alien to the Indian business. He's actually set up the Zara stores in India along with Tatas while working from the Inditex side.
Okay, I think stock was up 6.5, and they like what the backdrop and the profile. It's moved up to the day's highest point as we are addressing it. So another 4% as Mangalam was talking about, basically the profile of who the new CEO is and what he's done in his previous roles, etc. The other one is Nykaa, Mangalam, if you want to address that as well. Stock's up 6.
From foot to face, so let's come back up now. You talk about the beauty and personal care opportunity out here. Nykaa, the analyst meet is currently underway, but we do have their investor deck, which they've uploaded to the exchanges. And out here as well, they are speaking about a multifold opportunity. They expect from now to FY30, the gross merchandise value could be as high as nearly 50,000 crores or $5 billion. And they've broken it down into both beauty as well as fashion business. Beauty, obviously, they believe that, can be a multifold growth here and margin expansion too. From an overall company basis, they expect the revenues from current levels can become either 2x or 3x by FY30. EBITDA grows a shade higher by 4 to 5x. And margins, which are currently at around 7.5%, would grow to low to mid-teens from here on as well. So EBITDA margins double, EBITDA quadruples, and the revenue doubles or triples as well, depending on what side you're looking at on both sides of the range. For beauty segment, the gross merchandise value grows between 2 to 3 times. Healthy double-digit margins as against high single digits that the company is posting right now, with offline presence in 600 stores as well. If you look at the fashion business, that's been a bit of a margin drag. Now here, which broke even in the fourth quarter last year, they believe that they can get to high single-digit EBITDA margin by FY30. So that's a big jump from current levels. And they believe sustainable margins here could be over 10%. Two other callouts that really stand out for me, their own brands, the House of Nykaa, which did about 3,100 crores in net sales value in the last year, could go all the way up to 5,000 crores. And if that were to happen, margins increase further. And add to that, we've also seen, their wholesale business, which is outside of the Nykaa ecosystem, they are selling to all the other retailers in the country, that business could do about 3,500 crores in gross merchandise value as against 1,200 crores earlier. They are targeting 1 million retailers in reach by FY30. So across the board, multi-fold opportunity is what the company is targeting, and that's what the street likes. Stock was up 5% yesterday, up another 7% today.
All right. Thanks very much, Mangalam, for that. So that's, consumer right on the top of the program. Two names, Bata and Nykaa, in focus. Well, let's just go back to Mitesh. We had a bit of a technical issue with him earlier. Mitesh, hopefully in a better line. Go on. What would you recommend?
I was giving a buy on Lupin with a stop at 22.90 for targets of 23.75. And the other one is ICICI GI or ICICI Lombard General Insurance. That's a buy as well. Keep a stop below 1800, look for targets of 1890.
Bata, any thoughts? The two names, first Bata and then Nykaa, which Mangalam was talking about?
So Bata, a big breakout, very good pattern over here. I think the stock had made a high of around 774 in April and then corrected all the way down to 650. So that could be a profit-taking point. But eventually, I think the candlestick today, along with the indicator position, suggests that we should be looking at 850 over the next few weeks. So that's, maybe one target we can eventually even get past that. But 850 looks very logical and gettable over here. And Nykaa is something, which again, I also am interested into. The breakout was 282. So if we get a pullback, I think then the Nykaa stock looks like, heading towards levels of around 330, 325, 330. So very positive setup and a good breakout on Nykaa as well. Even if traders want to buy, 10, 11 point kind of decline should invite long positions.
Okay, all right. Got that, Mitesh. Thanks a lot. Well, let's welcome Deven Choksi onto the show. Hi, Deven. Good afternoon. Good to see you. When can Mr. Rao, who's coming in and taking charge in place of, Gunjan, can he change the fortunes of Bata? As Mangalam said, it was a 2,000 rupee stock that after today's 10% up move is at around 750 rupees. I'm looking at the last few years, they've stagnated at around 3,500 crores. That's around 4-5 years they've done just that. And margins actually have come down from 23% to around 20%. What's your view on the stock from here on?
Yeah, Nigel, good afternoon. Well, I have always seen Bata as a company which has got a fantastic amount of distribution reach, which is probably quite compelling kind of a proposition. If you look at exclusive outlets, I think, of the company, they would be somewhere around 2,500 plus. They would have, I think, the merchant-owned outlets, I think, which would be more than 25,000, where multi-brand products are also displayed. More than 25,000 location presence that they have. And in the FOFO segment, that is the franchisee-owned, franchisee-operated segment, they would have about 700 odd kind of outlets. So from a perspective of looking at the reach, Bata has always been a very compelling proposition. Of late, I think one has also studied this particular company and found that they have actually started integrating the entire network of the company, the store network of the company, to suit the local demand and requirements. Up till now, I think they would be operating at a centralized level, and possibly, I think, as a result of which destocking was always being a bigger challenge. I think they have corrected this part as well. Now, with the Nike man coming into the company, what could be the differentiator? The differentiator could be product. If the distribution is right and if the products are compelling, then possibly I think you have prospects lying ahead. And that's what I think one would like to look at. We haven't yet had a chance to understand what kind of different product categories that they would like to bring in. But the fact remains that I think with a strong distribution network and if the product portfolio changes, it could be a good moat, I think, which one would like to look at.
It's a strong theme itself, right, Deven? I mean, not every management change will result in the stock performing, but there have been, and we've done pieces. I think Mangalam has done pieces. Nimesh has we put out data in the past over the last 2 years. Exactly these kind of situations where management changes have resulted in pretty large, which have turned the corner in a pretty substantial way. For a range of businesses. So actually, as a data point, it's a pretty useful data point, a starting point. And then, of course, other things all need to fall in place and has to be the right strategy and all of that. I mean, the market matters, which segment they're in. But I think it's a pretty it's something to pay attention to with regards to when someone new comes in. I think it's happening in the case of Bata. Of course, I mean here the business, as Mangalam pointed out, has been suffering. Growth has been low, so there is room to do at least try to do different things, and we'll see what the new strategy really is. Devin, I mean the other big story tomorrow is going to be the RIL AGM. Any thoughts?
Well, I think the more importantly, the few announcements which definitely one would like to hear, and one among them would be on the Reliance Intelligence side. They have been putting across the data centers, both I think to offer to their own companies within the group network, and also in partnership with companies like Meta, where they would be offering, I think, a captive facility to likes of Meta by running the complete infrastructure. Back-ended connected with a complete, I think, the energy segment, the renewable energy segment, and in a way, I think, becoming more formidable force in this particular space with even the LLMs that they are talking about, including different industry verticals that you'll be providing. So one would like to listen more about how exactly Reliance Intelligence is being positioned in coming times. Their building blocks are in place. Second most important point, which everybody wants to hear, would be, I think, Geo Platform. Again, a large company, probably I think 40,000-50,000 crore offering in the marketplace at some point of time. And that's where probably would like to hear what kind of preparation that the company has made to roll out this program. In fact, I think the satellites, the LEO satellite that we are talking about, based communication, that is again, I think, going to be a big announcement that we are seeing it. So completely transform business as far as I think the Reliance is concerned in the customer-facing businesses along with the industrial businesses. In my viewpoint, I think these are 2 or 3 main areas where one would like to listen more in detail from the company.
Okay, all right, Deven, I'm going to turn the attention to metals yet again. I'm going to ask you about 2 stocks, Kirloskar Ferrous as well as Shyam Metallics. Let's address the news spaces first. Kirloskar Ferrous is up close to around 10%. The stock has come off a little bit from the top as they bagged a small but clearly an effective order. Now, do note the stock was down close to around 25% from its 52-week high. What's the news flow we got overnight? Well, they received a contract for supply of pig iron. The buyer, well, he has an office in London, UK. That's what they've disclosed. In terms of order details, the order deals with a supply of around 30,000 tons of basic grade of pig iron on a FOB basis. The contracted value, well, close to around $13.5 billion. And this has to be completed by 15th of August 2026. So a small but effective order, 30,000 tons on a capacity of around 7 lakh tons basically means that it's close to around 4%. But they're seeing a big outsized move. So clearly the street is looking at other factors and getting excited about the stock after it corrected from 650 to 450. Next up, Shyam Metallics. That one's buzzing in today's trading session. They have laid out a very, very ambitious 2031 target. To give you the numbers, on revenues for 2031, they're talking about around 42,650 crores. On the EBITDA front, 6,236 crores. So big numbers. Just take a look at it. They're looking at a surge from current levels. On ratios, they're talking about 22%. They'll stay net cash positive, and also they'll be focusing on the value-added downstream products. The key EBITDA drivers for the next few years, talking about such big numbers, what's going to drive that? Stainless steel currently is very small in terms of an EBITDA contribution. But the focus is clearly there because they're talking about the number going to around 1,100 crores. Carbon steel, currently it's, the key part of their business at around 1,700 crores. It'll go up, but not in the manner that stainless steel will go up. So it'll go to around 2,900 crores. And on SBQ, which is special bar quality, that's likely to report close to around 1,000 crores of EBITDA. So that's how they come to that enormous number of around 6,200 crores or thereabouts. They'll require capex. $1.1 billion of capex is what they're looking to deploy over the next 4 to 5 years, which will be funded by internal accruals. They're saying there'll be no debt. And the past record has been pretty good as well. Over the last 20 years, the CAGR has been around 20% on revenue, EBITDA, as well as PAT. But keep in mind, that's on a rather low base. Jefferies, they're enthused post this analyst meet that was held yesterday. They have a buy rating. They have upped their target price. They are factoring in the EBITDA moves up as well as EPS move compound at around 14 to around 16%. They also go on to add that this is one of the best growth potential stocks in the metal space here in India. So stock is up 2.5%. Any view on either of these names, Deven? Do you like either Kirloskar Ferrous or Shyam Metallics?
So I think the pig iron and the coke supply, I think, has been always, something which I think we have looked at in kilosquare ferrous. Now, due to the war-related issues, I think the coke supply probably was becoming expensive affair, which now, at least, I think that part is taken care of in form of, I think, the price is coming down. So that is an important point from the profitability point of view. Second most important point, which I find that with this UK business getting started with effect from next month, it appears that I think many of these particular companies who own their export business are likely to be significantly large beneficiaries. Few of them with whom we have been talking in general, I think they have been extremely optimistic about the FTA business bringing a good amount of collection for them on form of exports, and at the same time higher amount of profitability. So could be, I think, one of the possibility for this kind of companies to look at from the perspective of seeing the higher amount of growth, both in form of the turnover exported and at the same time, I think, lower amount of input cost because of the ease of the supply chain logistic pressures on the import of coke oil.
Okay, got it. Devin, I wanted to ask you about these kitchen appliance makers. Any view on either of them? Stovecraft, that's been the biggest underperformer among the three listed players. That's TTK Prestige, Hawkins, as well as Stovecraft. But in the last 1 month or so, the stock is up close to 20%, though all these three stocks, they're either down between 25 to around 50% from their peak. Now, valuation-wise, you're getting comfort with Stovecraft, and we spoke to the management, I think, 2 weeks ago. They sounded very optimistic. For the time being, the stock is at the high point of the day. You like any of the three?
Honestly, we don't have any coverage, so I think won't be able to give any specific price, target price, etc. But we have been looking at the space, and probably we have been finding that post GST cut in various cases, the products have become, I think, more affordable, and as a result of which, we are seeing a traction in most of the cases, including in the white goods products case. So frankly, I think that's where many of these companies have been remaining extremely comfortable about the journey going forward. And current year, despite of whatever the first 2 months of current year in which the war-related situation has affected, including on the input side of the activity and even the production side of the activity for some of the companies, still I think the demand scenario is remaining absolutely robust. So yes, I think they are likely to see the better current year in times. Maybe I think valuation-wise, I have not looked at them enough, but maybe slightly priced, I think, as I would like to call it as. They are not completely available at the cheaper levels.
Got it. Okay. All right. Thanks a lot, Devin, for joining in. Valuation's not very comforting, though Devin and team are having a look at it, the kitchen appliance makers. So I think good time to slip into a short break. You come back, we'll have Rahul Veera who will be joining in to help us out with his view on the markets. Stay tuned. Hello and welcome, back to Closing Bell. Well, it's that part of the show where Harper joins in, and he, as always, will bring us something very, very exciting. High valuations in the Indian market have been a concern for domestic as well as international investors alike. But do higher valuations also imply underperformance? Well, as per Jefferies' note, multiple sectors have seen strong returns over the last few years despite valuations being high. Harma joins us to help us out with all of those details. Harmas?
It's a very interesting analysis that Jefferies has done, and they also are of the opinion when we usually talk of high valuations, we usually talk of it with a tinge of concern. But here they have highlighted 8 sectors over the last 15 years where their valuations have been significantly higher in comparison to normal levels. But despite that, they have managed to deliver strong returns over the next 2 to 3 years. Now, which are those sectors? Well, they have highlighted defense, retail, NBFCs, cement, FMCG, capital goods, hospitals and hotels. I highlight a couple of them for you. Now, for example, defense was analyzed between September of 22 to July of 24, and by September of 22, their 10-year average multiple, the valuations were 41% higher than their 10-year average multiple, and despite that, they still managed to outperform the Nifty by a whopping 229%, and it was led by a 33% EPS CAGR as well. What led to that? The indigenization push, strong order visibility, import substitution, all of them contributed to this defense outperformance despite expensive valuations. Take a look at NBFCs as well. Over a 5-year period between October of 21 to February of this year, the valuations for the NBFC sector as of October 21 had gone up as much as 78% higher than their 10-year average, yet it managed to outperform the Nifty by 40%, and that was led by the rising credit penetration, improved asset quality after the IL&FS incident, and of course scalable digital models as well. And the one sector that continues to be in the spotlight even today is the capital goods space. The first bits of re-rating happened in September of 2022 when the valuations at 32 times were already 28% higher than their 10-year historical average, and yet they managed to outperform the Nifty by 90% along with the 26% earnings CAGR. Now, what led to that? And revival in the investment cycle after COVID-19, strong order inflows, better margins, all of them fell into place. Now, there is one more sector that is joining this category, and that is power. Why is that so? Jefferies believes that supply and demand side drivers are aligning, and therefore the power stocks are among the best structural plays in the country currently, as there is a strong demand visibility, the balance sheets of the state electricity boards are improving, and the demand from the data centers is also on the rise. Then they have highlighted among their top picks JSW Energy, Adani Energy Solutions, Premier Energies, and Siemens Energy going in with their thesis of hard assets. So they have highlighted that despite expensive valuations, sectors have done well in the past, and they expect power to follow suit.
All right. Thanks very much, Hormus, for that. That is interesting, as always. There is news at the bottom of the screen. Lloyds Engineering has made an acquisition. Lloyds Engineering, the stock is... Nigel will have more on this, but the stock basically has doubled in the last 2 months. So from basically 40 to 85, I think it was up 10% yesterday as well. And they're making an acquisition which is about just under 1,100 crores in size. Nigel.
Well, that's right. Just a couple of words with regard to this. I think the Steel Infra Solutions, that's the entity I think that, is owned by Ravi Uppal. Ravi Uppal, as we know, I think he... if I got the name right, he used to be the MD of JSPL. So the acquisition is close to 1,000 crores. But I think, they've also gone ahead and they've done a pref issue as well. There's an issue of shares that should come up for you on the screen. And there are some marquee names in there. I think MK Ventures as well is in there. The issue is done at close to around 70 rupees, And Mr. Ravi Uppal is also part of that issue. So the consideration appears to be around 1,000 crores. Part of that will be via shares. Part of that will be via cash consideration. So the stock, as Prashant mentioned, had run up. But I think, close to a year or 2 years or so ago, it was at the similar levels. Then it saw a sharp correction. Mr. Prabhakaran has come in as, as an investor. And we know that when he came into Lloyd Metal, that's where the big turnaround did start off. So, yeah.
He came in at $49, right?
Yes.
48, 49 rupees.
Yes.
And that's basically when the move started. And, it's a very, very sharp gains in a very short period of time. But the thing is, I think the deal is financed through some stock and cash.
Yes.
So when, your stock's done so well, the acquisition is cheaper. I mean, because you're paying with...
Share swap is actually close to 50% of the acquisition. 1,073 crores is what the acquisition is.
Yeah.
And the share swap is around 500 crores or thereabouts. So we'll have to see strategically, the management has put out very, very big guidance for Lloyds Engineering works. So this is part of that as well. Organic, inorganic growth, I think they're going to be putting in another entity as well, merging it into this entity. So we'll have to see how that goes. For the time being, there is some profit taking, big warrants issue, a big acquisition as well. We'll have to see how it pans out.
What's the market cap, Nigel?
It's 12,000 crores.
12,000 crores. Okay. All right. Well, that's the Lloyds Engineering stock as things stand right now. Half financed by a stock which has doubled in the last 2 months, which is good. I mean, from an acquirer's point of view. Rahul Veera is with us, fund manager, equity investments, Nippon India AIF. Rahul, good to have you with us here. Good afternoon. Good to speak with you. There is a bull market, and the bull market and the euphoria is in capital goods / industrials, right? That is the one pocket, and then the entire mid and small cap part of the market gets blamed. But actually, the euphoria is in 1, 2, 3 of these pockets, right, Rahul? So what are you doing in that broader space? Because lots of action, lots of opportunities.
Absolutely. So we are seeing the mid cap and small cap doing relatively better going forward. But what we did is we did one very small exercise from 2009 to 2019. We pulled out the data in terms of the valuations for around 800 companies along with the newer listings. So Nifty 500 plus all the newer listings. We found that 66 companies, that's across IT, your FMCG, and banking and financial services, are still trading lower than the 2009 to 2019 cycle. Now, that cycle also saw some demon, GST, all the NPAs that were happening. So private banks at this point of time looks pretty good to us at this point of time. Capital goods, we have gone on a equal weight. Last year, we were overweight. We've been reducing the overall weight in the cap good side. Beyond that, consumer discretionary is something that we are looking forward to. We believe some of the names have corrected very sharply. There are some decent opportunities there.
Got it. Hi, Rahul. Good to see you in. Name a couple of opportunities, right? If you could disclose, I mean, a couple of stocks that you all have bought into with due disclosures. We'll take it on the screen.
I would avoid refrain from taking the names, but from a consumer discretion, for example, some of the luggage companies are doing very well. We are seeing the competition going off given the PVC prices, the luggage imports that were happening from China. So there is very minimalistic competition going on for one of the large players there. Beyond that, some of the private banks, large private banks are trading between 1.5 times to 1.8 times price to book on a forward basis. Look very attractive to us at this point of time.
Okay, so the luggage player is the one that's got a new promoter or the one that's been growing very fast?
I'll refrain from discussing that.
Or both of them?
I'll avoid any further discussion on this, please.
Okay, got that. But you've been quite, enthusiastic on this space itself, I think. So travel as well as, I think the other stock that y'all had, I mean, if I look through the large trade details, I think Taj GVK is what you'll picked up a large chunk out there. What about hotels, tourism? You're still bullish on that?
Absolutely. See, from a 3-year perspective, we believe this space is going to continue to grow. Your average room rates are growing at 8 to 9%. The supply is very limited across the tier 1, tier 2, tier 3 cities. And given all the geopolitical issues that are going on, we believe the domestic names will do slightly better than the global names.
Sorry, so you're saying local will do better than the global
yes.
companies. Okay. By the way, the market's seeing a bit of a spike as we speak. If the Nifty will tell you that we're up about a quarter percent. So from 24,100, we've basically added on about 50 odd points in the last. It's come through in the last couple of 2, 3, 4 minutes or so. That sharp spike we're talking about. Maybe just take a look at the Nifty Bank as well. There is a bit of a move, but I think it's more pronounced as far as the Nifty is concerned. But the Nifty Bank has also moved higher as we go into the last 30 minutes or so of trade. So that's that. Just a quick word. I think if you look at the portfolio breakup, Rahul, financials is still the top weighted, right, for you?
Absolutely. So banking and financials, consumer discretionary, pharma is something we are very positive for the next 1 to 2 year perspective.
PFCs. These are banks?
Equal weight or basically reducing weight in the cap goods sector from this point of time. And ITV continue to remain underweight there.
I see. This bank, the financials is largely private banks, or it's a mix of everything?
It's a mix of everything. So overall BFSI, banks plus capital markets plus your PSU banks. Across the sectors, we have the names in our portfolios.
I see. And industrials, capital goods, etc., you're kind of trimming as you go along.
Yeah, we are continuously trimming the names because some of them are trading at like 60 to 80 PE. We believe any one blip or in terms of what we saw recently in one of the names where one of the large order got cancelled and the suddenly stock went off. So these high valuations cannot sustain beyond a point.
Yeah. Within that pack, defense, right? Many of these stocks are back to, I think they are back at Operation Sindoor kind of levels. If that is a marker in that sense. Either it's a double top in the making or these are fresh breakouts. What's your sense, Rahul?
See, going forward, we saw the total export data, right? For FY26, almost 1.78 lakh crore was the export from the defense side of it. So government order book will continue to increase. Valuations from a 1 year or 2 year forward basis, it will never make sense. You'll have to play it as a theme. So from a 3 to 5 year perspective, how the cash flows will turn out, how the government is going to see defense as an opportunity. So between 11 lakh crores, the total capex that was allocated in the budget, right? So power and defense is something that will continue. Your road and railway might see some kind of a reduction this year, given the balance sheet of the government.
I see. Got that. And I see some healthcare names also in the portfolio, Rahul. There's on the hospital side.
Right. So see, they are continuously, if you see the ARPOBs or the margins, again, what are the capex cycle for the hospitals had to, for the past few years that we saw margin compression for some of these names. We believe the businesses will turn around from here on. The newer acquisitions some of these names have done, improving the margin profile, ARPOB profile. And again, valuations from a 3 to 5 year perspective seems very sustainable at this point of time.
Okay, got that. Rahul, we'll leave it there. Quick conversation. Thank you very much for joining us. Really appreciate your time here on CNBC TV18. We'll take a break. We are back. We'll get you what's happening in dealing rooms with Nimesh on D Street Chatter and some trading ideas as well. Stay tuned.
Welcome back. Well, keep an eye out on Bajaj Auto because the record date has come, on the exchanges just now. Remember, they'd already announced a buyback, and I think the buyback price was approximately, 12,000 rupees approximately. Yeah, 12,000 rupees per share is what the buyback price is. But what's new is now they've set the record date on the 24th of June. So if you have to be eligible for that, you'll have to buy it on T-1. I think on 23rd, that will be the last date. So that's why you're seeing an additional fillip that's come in there for those that are purely paying it for this particular event. That is the buyback. The record date has just been uploaded on the exchanges, 24th of June. It is, so it spikes up a little bit. But good time to get in Nimesh. He's here to tell us on D Street Chatter what's going on in dealing rooms. Nimesh?
Well, another strong day for the market as it consolidates with a positive bias and backed by FI buying as well. For the last few days, we're seeing the trend of FI buying has resumed, and that's the case today as well. At the same time, there is a lot of supply of paper coming in. Even today, there were a couple of large blocks. So the trend of large QIPs blocks continue. Today, for instance, the number will look a bit larger because of the large two blocks, which was amounting to close to 1,600 crores. So that's something to watch out for in the institutional data. Having said that, as I said, there is a bit of consolidation with a positive bias. But on the upside now, 24,250 can act as a bit of a resistance. So that's a level to watch on the upside. But broadly, this momentum in the broader markets and in Nifty seems to be backed by a bit of FI buying as well.
Okay, got that, Nimesh. What about individual stocks that are on your radar?
Well, in terms of individual names, the first stock on my list is Shaily Engineering. That's been under pressure today after a large block. Nearly 11 lakh shares got changed hands, and I believe one of the domestic mutual fund was a seller in today's block deal. So disclosures, if any, could be interesting to track in Shaily Engineering. The second name is Bharat Coking Coal. That's been buzzing as well on very large volumes. In general, there has been buy flows at HNI desk, and I believe one of the leading HNI investor has an active buyer as well in Bharat Coking Coal of late. The third name is Jyoti CNC. Even that's been consolidating in a narrow range of late, but I believe the management happened to meet some large investors in the last couple of days, and there is a very strong indication of a large order win as well for the company very soon. And the last is DLF. Even that's been buzzing in trade today on good volumes. I believe there were multiple block deals as well in DLF today, but additionally, some larger HNI seems to be actively buying as well into DLF in the last couple of days.
Okay, thanks a lot for that, Nimesh. Well, let's take a quick check on the F&O markets. Then the India VIX continues to cool off. Remember, the India VIX had gone dancing away to 29.30 when that war was on. So that's cooled off to sub 30 now. That's one of the indicators of the kind of move that we see in the market, and fear is gradually, subsiding in the market. Once it breached that 50-odd mark, from there, I think we have seen another 400-500 points in the Nifty itself. The PCR, that's holding at around 1, so it's more or less in the middle of that range of 0.6 to around 1.6. Put writing is evident. 24,100 put premiums half to around 80 bucks from around 160 rupees. But on the flip side, I think the bears will want to protect this 24,250 mark. The reason I say that is at the 24,100 call, the premium out there is 150 rupees. And if you add that to around this 24,100 call, let's pull up the 24,100 call. It should come up for our viewers on the screen. Yes, that's the one that I'm talking about. That one was around 150 rupees. So if you look at the 200 DMA, that comes in line with around the 24,250 odd mark, which is the next resistance zone from a bullish perspective. The Nifty Bank, that's the one that's leading the way. It continues to outperform. And HDFC Bank, the big underperformer, that's come into play as well. And as we speak, that's at around 800 rupees odd. Individual stocks, Keynes, that's been in the F&O band. That's coming for a bit of a short covering bounce. So good move is what we're seeing out there. with the open interest down. You have I think that one, in fact, could be one of the candidates to come out of the FNO band. Let's see how that goes. Trent is the other one that's seeing a bit of a short covering bounce, but on the flip side, you have Radico that's seeing some fresh buying in today's trading session. So the screen is looking good. The Nifty Bank is leading the way. And you have the big boy, HDFC Bank, that's woken up from its slumber. Will be good times for the Nifty as well as the Nifty Bank from here on, if that can continue with this sort of a momentum. Mitesh Thakkar, those back with us. Mitesh, what are your buy or sell call recommendations that you have?
Last 1 hour, actually, has been very good, and that kind of reaffirms the uptrending movement. So we'll take some BTST calls. MFSL was a BTST with a stop just below 1675.74. Good for 1705, 1710 kind of a target for tomorrow or day after. And the second stock which I like, that's Page India, BTST with a stop below 39,900, 39,890 and a target of 40,254.
Got it. Okay. All right. Thanks a lot, Mitesh, for that. Well, let's focus on the big IPO. NSE has filed the DRHP with the market regulator. Yash is with us to fill us in with all of those details. Yash?
Well, the largest stock exchange in the country coming out with the largest fundraise through an IPO as far as the history of Indian capital markets is concerned. A closer look at the DRHP document would tell you that the total number of shares that are on offer through an entire offer for sale issue is about 14.89 crore shares. This forms about 6% of the total paid up capital of the National Stock Exchange. We had reported this thing yesterday and we continue that. That is, the IPO size is likely to be expected between 30 to 32,000 crore rupees, and that would value the National Stock Exchange at 5 to 5.33 lakh crore rupees. As I said, it's the largest fundraise in the history of Indian capital markets so far. Who's selling out of the NSE's OFS portion? The largest selling shareholder is State Bank of India. They have about 3.23% stake in the National Stock Exchange, and out of the total shares which are on offer, their portion comprises of about 16.6%. The next one is MS Strategic. They have about 1.2% stake and they offer about 10.75% of the total shares on offer as far as the OFS is concerned. These are the companies on the extreme left. You'd see how much they hold and how much they offer. Stock Holding Corporation, GICRE, various other PSU institutions coming together to offer partial stake as far as the OFS itself is concerned. Now, in terms of, as I said, the paid up capital total about 2,475 crore shares. What is on offer forms about 6% of the equity paid up capital. In terms of revenue and the financials for NSE, FY26 was a weak year in terms of top line growth as well as the operational performance of the National Stock Exchange. But do remember, by the time the company files its RHP, it will release the first half numbers for FY27. So those numbers will be very crucial in terms of how the company is performed in the first half of FY27. As far as the next slide itself is concerned, here in terms of market share, this tells a large story in terms of the domination which NSE has had in Indian capital markets. Cash market segment about 93% market share, equity futures about 99.8, equity options about 74.5, currency futures 99.5, and currency options almost entire market belongs to the National Stock Exchange.
All right. Yes, thank you very much for that. So that's interesting. Well, we spoke with, Mrugang Paranjpai, ex-MCX, on his thoughts on the upcoming NSE IPO. Listen.
Can you imagine that one single stock like NSE, with the amount of foreign holding that it allows, can actually draw in close to the amount that we talked of in the entire deposit mobilization? Maybe $40-50 billion of FPI investments can just come in purely because of one stock of NSE, which will draw lots and lots of foreign investors. I would expect a lot of, sovereign funds, all of that sort of long-term and very, very strong capital flows coming in. So it's not going to take away. In fact, to a lot of people who've been suddenly saying that, hey, India's lost the flavor, etc., we might be able to add back and get the capital allocations coming a little more towards our side with something like this.
Sudeep, welcome to the show. What do you make of this large IPO? We've been hearing about it for a while, and it could probably see the light of day in the next few months. What's your preference? BSE has been a super duper outperformance. It has good amount of momentum. But now NSE could be coming to the bourses, and it will be at a discount in comparison to BSE. So your preference among exchanges, NSE that could be listed, BSE and MCX that have been big wealth creators?
Well, I think it's a very welcome development, Nigel. And I think, overall from a capital market point of view, it's a good news. BSE also will gain. Remember, NSE is going to get listed in BSE. And BSE cash market volumes are expected to go up significantly. So one indirect beneficiary will be BSE as well. But if I have to pick one stock amongst the exchange stocks, amongst the listed ones, I've been preferring MCX for quite some time, and I do continue to prefer that. Once NSE gets listed, let us see where the valuation settles. Post that, we can take a call. But at the valuation which is being talked about, at the offer price which is being talked about, it of course is at a discount to BSE's price today and does look attractive compared to BSE. But let's see where it settles post-listing.
Yeah. But you, out of the lot, you like MCX, right, Sudeep?
That's right.
Yeah. Do you own a NetWeb, Sudeep? I think we discussed this earlier, not lately, but I think it's at a new high, 5,100.
Well, Prashant, unfortunately, I don't own it. But the excitement, obviously, this entire AI-related excitement is getting played in India through only a handful of stocks, and NetWeb is one of them. Not sure about whether it's justified or not, whether we can impute an AI valuation to NetWeb, but that's what is happening. I don't think I will recommend a buy in NetWeb at current levels or try to buy this stock at these levels.
Yeah, I think in the case of NetWeb, Sudeep, they are not, in most of the data centers being built are not AI data centers in India. They will come, but they're more standard data centers. And where NetWeb comes in is basically racks and servers, etc. GPUs, of course, they have to depend on NVIDIA, but they also are distributors for NVIDIA in India. But they do racks, server racks, etc. But the point is they're a kind of a late cycle player, right? You got to build the data center, you got to do all the wiring, cabling, all the EMP work, and then you put the servers in. So the ordering at some level for a company like NetWeb will only start after all of this. So this will, right now we're hearing these big announcements, but all of this will translate into orders in a big way, only I guess a little later. So it's not an early cycle play in that sense. Of course, and the play is data centers, it's nothing else for this one. Lots of stuff moving around, and we'll talk more. We'll take a break. Sudeep, stay with us, and we come back with a few more names on the other side.
Welcome back. Well, let's squeeze a couple of, questions into Sudeep. We have some comments coming in from the RBL Bank CEO as well. I think we'll tag the correct stock. India remains the fastest growing major economy driven by rapid digitization. The RBL stock actually should come up for you. We'll get that corrected as well. Sudeep, any view on RBL Bank? The stock ran up in anticipation of the deal. The deal got concluded. The stock ran even more, after the initial news flow got cleared out. Your view?
Well, I've been positive on RBL. I think it's a good deal from an RBL Bank point of view. They needed capital, they needed growth, and they needed certainty as far as promoter is concerned. They've got all through this transaction, and I think it's a long-term positive for the bank. And I expect the stock price to keep moving up. Performance also has been improving. Stability in management will do wonders. That's what I believe. Overall, BFSI, our view has been positive, and we do like RBL, and also we like IndusInd, which I thought I'll mention because it's a turnaround case, and we do like that as well.
Okay, got it. RBL as well as IndusInd, got it. What do you were earlier bullish on aluminium, right? On all these players, Nalco, Hindalco, Vedanta Aluminium is just listed, and you have a couple of brokerage calls that have come out. What's your view? Aluminium price was $3,850 per ton around 7-8 trading sessions ago. Now, the war is called off, which is good for the globe, good for equity markets, good for humanity. But it may not be so good for aluminium because aluminium was factoring in a war premium. That's come down, though structurally it appears it'll be in deficit. Your take?
Well, I completely agree, Nigel. I think the war premium is gone, but structurally there is a deficit. The 10% of world supply, which comes from the West Asia region, it will take some time before the supply is restored. Anywhere between 1.5 years is the time which our guess is will be required. And aluminum prices will continue to remain at elevated levels. It may not reach the stratospheric levels it was, but it will remain elevated. And companies like Vedanta Aluminium will continue to gain because of that. Also, look, specifically Vedanta Aluminium is fully integrated. They're expanding production capacity, and they are definitely very well positioned to take benefit of this aluminium, for lack of better word, super cycle.
Sudeep didn't ask you about Bata India. We discussed it earlier. Look at the stock. Oh boy. It's up 16% now. At 2:30 when we started, it had come off the highs and it was up some 7%, 6.5%, 7%. It's up 10% from that point on in the last 1 hour or so. Any thoughts, Sudeep?
Well, Prashant, I think this is one stock which can do wonders. I mean, today's excitement is on the appointment of the new managing director who's coming from Nike. But I think this has got a fantastic potential. They have got an unmatched distribution across India. Every nook and corner, you have a Bata shop. The product and the pricing and positioning was probably not appropriate. That's why they couldn't take the benefit of the massive distribution outreach. Now, somebody with the right skill sets and somebody with the right efficiency coming in can really turn around the company, and it can be a multi-bagger even from current levels.
Yeah. So that's an interesting one. And as I was saying earlier, management changes could be interesting things to look at more deeply, study more deeply, because some of them have turned out to be big winners over a period of time. And Bata, of course, is especially depressed. Price has been depressed because earnings have been depressed for a while now. So 790 on Bata at close. It's clearly the stock of the day. By a mile. And huge volumes, by the way, not small volumes at all today. Okay, so we end about 95 points in the green, and almost all of the 90 points have come in the last, 40 minutes. 255, the Nifty was at about 24,100, and we ended about 24,180. So that's the final thing. Nifty Bank, mid-cap, small-cap indices looking good. And if you want to go sectoral, tourism, top gaining sector, healthcare, the CPSE index, real estate is the index. And perhaps the only loser was the IT index, which was down across the board, cuts coming through today. Now, Max Health was the biggest Nifty gainer by far, 6.5% gain. Adani Enterprises was up at number 2, and there was Indigo, which did well. As I said, Infi, TCS, Wipro, the big losers as far as IT on the Nifty go. And of course, in the broader space, there is Bata, but there were NetWeb, there was CDSL, and so much else which did, very well. So KPR Mills was up 14, Keynes and DLF and Astra Micro, Electra, Nelco, Radico. I could go on with enough and more action to see us through this Thursday afternoon. On the other side, maybe Shaily Engineering was down 5.5%. It's the big volume-led cut. MCX was down a little bit, 1.25%. Walkart was down 1.5%. Varun Beverages sold off about 2%. And there was a Paytm which was down about 2.33% or so. So that's the picture. That's the day. Sudeep, thank you very much for joining us on closing. But stay tuned. Stay with us in Markets Forward coming up in just a bit. Thank you for staying with us on the show. More on the other side.